Hello everyone, this is Ahamed Anan. My student ID is APS3585. So I'm here to do my corporate accounting individual presentation. Sorry to come to you with this kind of a background, and I know the requirements is that I have to be professional in a professional environment and stuff, but I'm sorry due to this situation. And also, since I live in a shared house, I don't have access to much of a good environment arrangement place or something. So I just decided, all right, I'm going to do with this app and this little beautiful tiny my room. So, West Farmers is selected to analysis of treatment of income tax and treatment in financial statement for 2819 and 2018. So, when I say West Farmers, you might know it's the owners of Bunnings Warehouse, Woolworths, and all. So it's one of the biggest company in Australia, and since I had the easy access to the financial statement and all, so I choose to do West Farmers as an example for my presentation. So we're gonna talk about the tax related stuff in this financial statement. So the difference between the tax profit and accounting profit is to be evaluated with the treatment of deferred tax assets and deferred tax liability tax treatment in financial statement. The identification of temporary difference and the permanent difference of West Farmers is done for deferred tax treatment. So accounting profit and taxable profit, there's two terms. So accounting profit is determined by accepting the Australian accounting standard for treatment of revenue, expense and others. The AASB standard have set of principle and accounting treatment that are commonly for all entities in Australia, regardless of it's a government entity or private entity or anything. So taxable income determined by deducting all deduction from accessible income as per the instruction by ATO, which is Australian Tax Office. Temporary difference of deferred tax asset and deferred tax liability. So we call in the short term DTA and DTL. So the temporary difference shows a difference between the tax base and the carrying value, and this difference is eliminated with the period. So temporary difference shows the temporary difference between the tax base carrying value and the difference is eliminated within a period. So deferred tax assets reflects the reduced tax liability in the future is low due to higher taxable income or lower deductible expense in income tax than the accounting standards. So deferred tax liability shows a reduced tax liability in the future is higher due to a lower taxable income or higher tax deductible expense in income tax than accounting standard. So it could be in this way around or other way around. So that's what it explains in here. So income tax expenses. West Farmers has an income tax expense of 859 million in 2019 and 725 million in 2018. So accountants of West Farmers have figured out the income tax expense of 2019 and 2018 is 859 million and 725 million respectively, which is high in numbers. So income tax expense are when I told you in the beginning, West Farmers is one of the biggest business venture in Australia. You can imagine how much tax they're contributing to the Australian economy. So 859 per year is 259 million per year. It's a lot of money. Anyway, so income tax expenses statutory rate 30% are 840 million and 640 million in 2019 and 2018 respectively. Adjustment of the prior period is non-deductible item shared in joint ventures, associations and others. So West Farmers DTA and DTL, which is deferred tax asset and deferred tax liability. West Farmers has total deferred tax asset of 799 795 million in 2019 and 1,365 million in 2018. So Wesfarmers have deferred tax liability in 2019 is 795 million and 1,365 million in 2018. So when we take the balance sheet in an accounting, so assets equal to liability. So same like this. So when Wesfarmers has the total deferred tax asset is same as the deferred tax liability in 2019 and 18. So Wesfarmers net deferred tax assets 194 million in 2019 and 692 million in 2018. That presents overall higher tax expenses as per the income tax law than the accounting standard. So they're trying to present that the present overall higher tax expense as per the income tax law than the accounting standard. So there are two terms: accounting standard, accounting law. So in this regards, it shows a bit of a low in compared to accounting standard values. So Wesfarmers income tax expense versus income tax liability. So Wesfarmers total income tax payable of 222 million in 2019 and 299 million in 2018. Current liabilities whereas the income tax expense in 2019 are 859 million and 725 million in 2018. The reason for difference between the income tax payable and income tax expense are part of the income tax paid in advance in the current period and a part of tax paid in the previous period, resulting in a difference between income tax expense and income tax payable. So Wesfarmers income tax expense in the cash flows. So Wesfarmers cash flow statement present the income tax payment of 1,082 million in 2019 and 1,308 million in 2018, which is a difference from income tax expense of 859 million in 2019 and 725 million in 2018. Reason for the difference between income tax cash flows and income tax expense, a part of income tax paid in the previous period, while some of the income tax paid in the current period. So same like before. So some of the income tax being paid in advance in previous year and also something paid. So there's a clash between until the proper accounting to be done. Yeah. So Wesfarmers temporary and permanent difference. So there is temporary difference and permanent difference. Temporary difference shows a difference between the tax base and carrying value of a liability of an asset, where the permanent difference remain the same for lifelong. So Wesfarmers depreciation amount difference between the accounting standard treatment and income tax law treatment is an example of temporary difference. Wesfarmers permanent difference is in the form of recovery value intangible through the sales, while income tax amortize tangible assets over a particular period. So what did we learn from this presentation? This study provided a lot of opportunity for learning about the tax treatment in financial report through the analysis of tax treatment by Wesfarmers. The treatment of deferred tax asset, deferred tax liability is quite difficult areas for understanding, while these are also interesting for learning to tax treatment in a large companies. Tax expense and the tax payable are easy for understanding, along with the difference between tax expense and tax payments. So in conclusion, Wesfarmers has total income tax expense of 859 million and 725 million in 2018, with the total deferred tax assets of 795 million in 2019 and 1365 million in 2018. The total deferred tax liability for Wesfarmers in 2019 is 795 million and 1365 million in 2018, with the net deferred tax assets of 194 million in 2019 and 692 million in 2018. That present the overall company has a lower deductible expense and higher taxable income in recent both period. Wesfarmers has temporary difference and permanent difference for deferred tax assets and liabilities as a treatment of intangible asset. Indefinite life treatment is a permanent difference, which the treatment of a depreciation is the temporary difference. All right. Thank you, and then have a beautiful day up there.